Every morning, before you open your eyes, trillions of dollars have already moved across global markets. London opened at 8 a.m. Tokyo closed hours ago. New York is 45 minutes from its bell. And somewhere in every tick, every candle, every piece of earnings news that hit a wire while you slept, were signals, opportunities, risks. Every morning, before you open your eyes, trillions of dollars have already moved across global markets. London opened at 8 a.m. Tokyo closed hours ago. New York is 45 minutes from its bell. And somewhere in every tick, every candle, every piece of earnings news that hit a wire while you slept, were signals, opportunities, risks. The question has never been whether those signals exist. It has always been who gets to act on them. Until recently, the answer was hedge funds, quant teams, and expensive Bloomberg terminals. In 2026, that answer has changed. Welcome to episode 4. I am going to show you exactly how. In episode 3, we went inside the agent's mind. 6 implementation pillars: short-term memory and context windows, long-term memory through vector databases and RAG, system prompt engineering with a 6-component framework, and AI-reliable tool design with 5 principles. We covered react prompting, thought, action, observation, the loop that lets agents self-correct, and the planner versus executor pattern, separating strategic sequencing from precise execution. Finished with a complete production architecture: trigger, context assembly, planner, executor, tools, audit trail. If you missed episode 3, link in description. Episode 4 is where we get specific about money. 5 trading agent types: signal detection, execution, portfolio monitoring, risk management, and market research. I will also be direct about what these agents cannot do and what you must have in place before deploying anything that touches real capital. The responsible framework is not optional. 5 intelligence functions in financial trading: monitoring, research, execution, portfolio management, and risk management. Historically, a solo trader juggled all 5 simultaneously under psychological pressure. That is why most retail traders underperform, not from lack of intelligence, but lack of bandwidth. Agentic AI changes this equation entirely. Every automated trading system must have a human in the loop at the right points. An agent surfaces signals for your review. An agent enforces your predefined rules automatically. But changing those rules, overriding a risk limit, or significantly increasing position size, these require deliberate human confirmation. This is not a limitation, it is the architecture that separates responsible from reckless. The signal detection agent is the market's eyes. In A10, a scheduled trigger fires every 5 minutes during market hours. It calls a market data API for your watchlist instruments. Your criteria live in the system prompt: cross above RSI 70, price above 200-day MA, volume 1.5 times average. Agent evaluates the data. If conditions are met, a structured alert fires to your notification channel within seconds. Because criteria live in the system prompt, you define signals of arbitrary complexity, conditions that would require custom code in traditional trading systems. Run multiple signal agents simultaneously, each watching different instruments or timeframes, all reporting to one notification pipeline. Critical rule: signal detection and execution must be separate agents. Always keep the human review layer between them. Once you confirm a signal, the execution agent acts. 7 steps: receive the confirmed signal, query current account balance, apply position sizing, typically 1 to 2% of equity, check pre-trade risk rules, max open positions, daily loss limit, correlated exposure. If all pass, place the order, confirm the fill, and record slippage. Write a structured entry to the trade log. The most critical execution feature: the circuit breaker. Hard-coded at the workflow level, not in a system prompt, immediately halts all agent activity if daily loss exceeds your threshold, account balance drops below your floor, or API returns unexpected errors. The agent reasoning layer can be overridden by context. A hard-coded circuit breaker cannot. This is not optional. The portfolio monitoring agent is your chief of staff. runs daily after market close, queries your positions database, pulls current prices, calculates unrealized P&L, drawdown from peak, win rate, and average holding period, passes all data to an LLM, which synthesizes a structured daily briefing. You read it in 3 minutes, make decisions requiring human judgment, go to sleep knowing exactly where you stand. Alongside the daily briefing, the portfolio agent polls positions every 15 minutes for emergency conditions. Any position has moved more than twice its average daily range against you. A stop-loss level has been crossed. Total portfolio drawdown exceeds your threshold. When triggered, an immediate real-time alert, not a scheduled briefing, fires to your phone so you can review and act. This is the most important part of the episode. The risk management agent exists to protect capital, not to make money. Professional traders do not lose accounts in one catastrophic trade. They lose them in a series of emotionally driven decisions that compound over time. An agent has no emotions, no rationalizations. It applies your rules exactly as you define them, every time, regardless of what the chart looks like. The risk agent runs on every execution and continuously monitors positions. Its rules: maximum position size as percentage of equity, maximum simultaneous open positions, maximum correlated positions per asset class, daily loss limit, trading halt threshold, maximum drawdown from peak, full halt requiring manual review, individual stop losses per instrument. These rules can only be changed by you, manually, never by the agent. The research agent scans news, earnings, and filings to surface intelligence before markets price it in. 3 triggers: a scheduled morning run 90 minutes before open, an event trigger for scheduled releases, and a keyword alert monitoring newswires. For each trigger, retrieve content, extract relevant sections, pass to LLM with analyst system prompt, receive structured summary with material info, likely impact, position relevance, and confidence rating. One high-value use case: the earnings preparation agent. 72 hours before an earnings release, it retrieves the last 3 reports, extracts revenue and EPS figures, pulls analyst consensus estimates, and produces a briefing. What analysts expect, historical performance versus expectations, key metrics to watch, and prior market reactions to beats and misses. This arrives before the release, preparation rather than reaction. The concrete N8N build, 7 nodes, scheduled trigger every 5 minutes during market hours. HTTP request to Alpha Vantage for OHLCV data, code node calculating RSI, moving averages and volume average, AI agent evaluating your signal criteria and returning structured JSON. If node routing on signal presence, notification node sending the alert, log node recording every evaluation, total build time 3 to 4 hours. Cost for this initial build: Alpha Vantage free tier, N8N Cloud free tier, notification via email, effectively 0. Scale by adding more instruments, connecting a real broker API, and layering in portfolio and risk agents. 3 to 4 hours of build time, 0 ongoing cost. An agent watching your markets continuously for nothing. In episode 5, we move from trading to personal finance and wealth management. 5 agents, daily financial monitoring with morning briefings, savings optimization, debt management, long-term investment research, and a complete client portfolio agent for financial advisors managing hundreds of relationships. The same architecture that serves a solo investor serves an advisory firm. Episode 5 drops next week. Hit subscribe right now. Not at the end of this sentence, now. Subscribers get each episode delivered automatically. The compounding is real. Every episode builds on the last. Hit like, 1 second. The algorithm uses it to decide who else sees this content. Turn on the notification bell. Episode 5 is for everyone, traders and non-traders alike. Do not miss it. Drop 1 comment, your industry, your problem, your country. Hashtag WealthWise request. The most requested use cases become future episodes. You leave this episode knowing how agents watch markets, act with discipline, enforce risk rules, and surface intelligence. The most valuable asset you will ever own is not in a bank account. It is what you understand that others do not. Smart money, smarter future.